Hi, I'm Chris Miglino with Sequire, and we are here at the world-famous Roth conference down in Dana Point, California. And I am sitting here with Nazar Khan from TeraWulf, ticker symbol WULF. Welcome. Thanks for joining us today. I appreciate it. So TeraWulf is in an exciting space in the Bitcoin mining space. You're one of the co-founders of the business.
That's right.
Give us a little history lesson of the Bitcoin mining space. What brought you there? What got you there? You know, and because it's fascinating when I hear these stories about how people started out in Bitcoin mining.
So our background, we were in the power business for 20 plus years. So we used to develop, build, and operate power generation facilities, both thermal and renewable in the United States as well as overseas. And so I used to run around the world and the United States trying to find places to build power. And so we'd build a power plant and we'd generate a kilowatt hour of electricity. And our business model used to be you generate it for X and you sell it for X plus something.
So pure electricity. You were
Pure electricity.
So you were arbitraging the electrical.
We would make it, then we'd sell it for something more than we made it. And we did that for a long time, for 20 years. 2018, 2019, that business isn't what it used to be. It used to be we could make a lot of power, sell it for more than you made it for. At the end of every year, you'd be happy. But that business has fundamentally changed, and there's a meaningful transition happening in the electrical grid with respect to how generation is being put onto the grid. And so there's a big push to decarbonize the supply stack. So that means thermal generators are retiring. You've heard a lot of coal plants retiring. Some gas plants are retiring. And all of that's being replaced by intermittent renewable resources, which is great for the environment, something we believe in, but it fundamentally altered how the business of power worked. And so in 2018, I started looking and saying, hey, we can't keep doing this because it's like banging your head against the wall. We're not making any money doing this. And so either we should just, kind of go home and enjoy ourselves, or we need to reposition how we're thinking about what we do. And so I thought about bringing loads to our sites. How can I bring a load, that's consuming power to my site? And then I can then use that load to really optimize the value of the energy that we were generating. And so that's how it started. And so I started looking at loads and I quickly tumbled into Bitcoin. So this is 2018. Once I understood how Bitcoin worked, I said, hey, this is amazing. Started buying Bitcoin. And everyone said the number one input to mine Bitcoin is power. I said, well, I know a thing or two about power. Let me see how this all worked.
Right place, right time.
And the more I dug into it, the more I realized that most of the players, and, I met with all the largest players in the world at the time, they didn't really understand power. They were into Bitcoin. They may have understood ASICs, which are the machines to mine the Bitcoin, but they really didn't understand energy and energy infrastructure. And so I said, hey, we can do this better. And so that's how our journey started. So in 2019, we started mining on our own. 2020, we did a deal for another large public listed miner. And then in 2021, we started TeraWulf. And so we've kind of taken TeraWulf now from an idea and a concept in 21, and we came public through reverse merger in December of 2021.
Well, that's okay. That's a quick jump. So there. I love hearing the story about the first miners that you set up, because there's always
the first miners we set up. So the first miners, this is 2018. So I met this guy who lives in LA, and I didn't know what a miner was, and I didn't know where to get a miner. So I met him. He's like, yeah, I got a bunch of miners. I'll send them to you. Can you run them for me? I said, yeah, well, no problem. Tell me when you can send them. I said, all right, I'm going to send them to you. I'm going to send you 5. But the deal is that, you got to give me 70% of the hash. I was like, no problem. I didn't really care. It didn't matter whether 70 or 100 or percent.
You weren't giving anybody any.
We were just trying to figure out what this is. And so we got these machines, and I call up the team. And so this was at our site in Montana. So we had a power plant there. Obviously, we had a lot of power. I had them sent there. So the guys call me up and say, what are we supposed to do? I was like, I don't really know, but let's figure this out. And so it took us about 4 days to get those 5 machines to run. Literally 4 days between kind of networking it, understanding kind of how to direct it to the pool, understanding how to allocate the hash rate on the pool. We'd been running and operating power plants for 20 years. And so this was exciting for the team because this is something new, but it's also something new. So that was literally kind of the very first, and 5 machines is nothing. Today we're running 75,000 machines.
Wow.
So, but it literally took us 4 days to kind of get those machines running. And again, through that, we learned just, again, how these machines work, how to network them, how to connect them to pools, how to kind of tweak them and optimize them. And so those became kind of like the pets of the entire staff. And so we've got, 35 people that work at that facility. Everyone wanted to touch them. Everyone wanted to play around with them. And it became this, this novel thing that people were really interested in. And what was very interesting to them is that what was required to run these at scale was the very thing that they were generating, in their day job. And so we've got a huge following now kind of at all of our facilities where, they see kind of link between what they do in making power and kind of creating Bitcoin. And so that was really, literally 5 machines on the desk bench that we got running, and that's where we started.
Do you remember when you got the first Bitcoin?
Yeah, and then so the first day, that was 2019. And again, we weren't making that much because we were only taking 30%, and we had 5 machines. So it took us a while to get up to 1 Bitcoin. But we kind of ticked away on a daily basis. And then our next jump was to go from 5 to 500. So we had to build out a container. So we had done a number of site tours at other facilities. Same thing, I called the team and said, hey, guys, we're going to build a container. They said, we're going to build what? We're going to build a container. I said, you're out of your mind. Again, you leave 5 machines was one thing, but you're asking us now to build a container to run 500 machines. And so same thing. I mean, we've got an amazing team, mechanical engineers, electrical engineers, and kind of every discipline you need. And so basically everyone rolled up their sleeves, and we designed a container now to go from 5 to 500. That container performed horribly. But we had made every single decision on how to make that container. So when it performed horribly, we were able to say, okay, we thought it was going to be this. That's not what happened. This is what we got to kind of go do. And so it was really kind of, we rolled up our sleeves. It was kind of a journey where every step along the way, I was very focused on ensuring that our folks and our team was kind of doing it so that we knew what we were doing and we could bring our expertise and our kind of background to really help enhance and make that better. So that's how it started. Again, we went from literally 5 miners to 500. And, and again, from there, it's just really scale and the kind of repetition. But
here you are today with 75,000 miners out there. And how many different facilities do you have?
We have 2 facilities.
Okay.
One is in upstate New York. We're on the shores of Lake Ontario. It used to be the site of a former coal-fired power plant. We're running about 160 megawatts today. We'll get up to 200 by the end of the year, or mid-year, 250 by the end of the year, and 500 by the end of 2025.
And how's the electricity being generated there?
We're connected to the grid, and so we're basically 25 miles directly east of Niagara Falls, and so it's 95% plus hydropower.
Okay.
That's being fed there. Our second site is in Pennsylvania. We're at the site of the Susquehanna nuclear plant, so we're directly fed from a 2.5 gigawatt nuclear generating station, and so we've got a 50 megawatts in operation there at a fixed price of 2 cents. And so, coming from an energy background, we have, probably, the lowest, or if not one of the lowest costs of power in the entire industry with respect to, the cost of power that we have.
And just so everybody knows, the cost of the power is basically your cost of goods sold in this business.
80% of your total cost to produce Bitcoin is basically your cost of power.
Right. So then, now what happens? Where does the company go next? And you released earnings, I think, today.
Yeah, in a few hours. Yeah.
This won't be out till after that. So for 2020, 2024, what did you guys do in revenue for 24?
So in 24, we're for our projections, and we already released kind of preliminary projections. And so this is out there. We're targeting about $100 million of free cash flow for the business in 2024. And, we're going to scale up from that in 2025. Again, we're going to end the year of 2024 around 300 megawatts of operating capacity, and we're targeting to end 2025 with 550 megawatts of operating capacity online. Talking about revenue figures in this Bitcoin space is always tricky. I mean, Bitcoin's all over the place, right? And so if you tell me what the price of Bitcoin is, I'll tell you our revenue. But regardless, we are at the point in our evolution where we're cash flow positive, generating, right now we're making more money than we ever had. And that's going to continue to grow as we continue to scale.
Let's talk about that accounting side of digital assets. Like, how does GAAP, just so everybody can understand, how does GAAP get recognized in with Bitcoin? Do you market to market on the upside, on the downside? What are the rules for?
So the rules have recently changed. And so for those who hold Bitcoin, it used to be that you could only market down, and so whatever the lowest price was, and if Bitcoin then ran up, you always still had it at the lowest price that you held it at. That's changed now. So every quarter, for those that hold Bitcoin, you're going to see fairly significant swings, right? Because they're going to market to market, every single quarter.
And which quarter does that start? Q1 of 24?
Yeah. So
okay.
That's kind of,
so Q1 of 24, everybody's going to have a big upswing if they were
they're holding Bitcoin, yeah. And our model, however, we see ourselves as converters, right? I mean, we think our business is to generate Bitcoin at the lowest possible price, and we monetize it every day. If you want to Bitcoin price exposure, buy Bitcoin, buy an ETF, buy MicroStrategy. There's 10 different ways to kind of play the price appreciation of Bitcoin. Our business is we're producing Bitcoin at a meaningful discount to where it's trading at on any given day. So whether Bitcoin's 20 grand or 200 grand, our production cost is going to be meaningfully lower than kind of that market price.
And what's that margin that you're shooting for in between?
Right now, our fully loaded costs, including every single cash cost that we have, is $25,000 per Bitcoin.
Yeah,
so Bitcoin is at 70 grand. We're making, 13, 14 Bitcoin a day, 45,000 a Bitcoin at 70 grand, 35,000 at 60 grand. So the numbers add up pretty quick.
And you're trading out of those as they're produced?
Every day. We're selling them.
Do you ever hedge them and do any type of hedging strategies around them, or is it just purely selling into the market?
You mean Bitcoin is this, in every 10-minute increment, all the inputs on Bitcoin, right? Your cost of power, the network hash rate, the price of Bitcoin. And so again, we view our business, like you should invest in miners because they're able to produce Bitcoin on any given day at a meaningful discount, right? Those miners that have a low cost of production should be able to produce Bitcoin at a meaningful discount to what the screen price is. And so we're asking people to invest in us because we can make a spread on Bitcoin, again, irrespective of whether it's 2,000, 20,000, or 200,000, that we're able to produce that Bitcoin at a significant discount to whatever that market.
There's no downward break-even point, though?
So right now, our $25,000.
Okay, so as long as we're above $25,000.
But the thing with the Bitcoin network, right, is as the price of Bitcoin comes down, less people mine. So that means our cost of production is going to go down because we're going to get more Bitcoin, with the same hash rate that we have. And so again, we think we have some of the lowest costs out there. And so we will be, one of the last men standing when, price comes down. So even in a downward price environment, our cost is going to go down from 25 to something lower than that as well.
And what is it now that, the big news is the halving coming up? How does that impact your business? And, what does that mean for miners in general?
I mean, it's your revenue gets cut in half, right? All else being equal, your revenue gets cut in half, from the day after the halving. And so I was talking about it before, our current, break-even cost is $25,000 given where the network hash rate is. We expect our break-even cost to rise to $37,000 kind of post-halving, given the block rewards cut in half. We may see some change in the network hash rate. We may not. But as we continue to scale, we're going to be able to continue to drive our per unit cost. And so we've been, getting ready for this. And so we're ready. And we think, if anything, the halving is going to further highlight the importance of profitability. And, we say not all exahash is created equal. We're running at 8 exahash today, but I think, our exahash is some of the most profitable exahash out there. Like we make more money off of 1 exahash than most companies do off of 1.5 exahash. And that's because of, again, our low cost of power, and our cost basis is really low.
So a lot of mining companies are making this transition to providing AI infrastructure. And where do you guys see yourselves in that space? Is that something you're considering?
Yeah. So we've been running a pilot for an AI company now for 5-6 months. We have a small NVIDIA GPU cluster running. Fundamental to that, right, is there is an ever-increasing need for high-density compute. And Bitcoin mining is one form of high-density compute, and AI is showing that there's other forms of high-density compute. And to be able to meet that need, you need large-scale, low-cost, clean power. That's what we do. If you look at our sites, we have large-scale sites, low cost of power, that come from, zero-carbon resources. And when you look at all of the Magnificent Seven, all the way on down to the AI companies kind of coming up, all of them are looking for that. And there is much more demand than there is supply. So we're getting phone calls, emails all the time with respect to, hey, are there ways to work with you with respect to the capacity that we have? So we are working to evaluate all of those things because fundamentally the infrastructure that we have, I talked about, we're at 210 megawatts today. We're going to be at 550 megawatts by year end of 2025. there's a lot of room for other uses within that, especially, given the increasing demand in the AI space.
So do you ever see a point where Bitcoin miners make the transition to AI service providers? Like, will the economics ever transition where it's more profitable to use your electricity to supply the AI infrastructure than it would for Bitcoin mining? And what would that do to the Bitcoin mining industry? Would it cause less miners, making it harder to produce another Bitcoin? Or,
So I mean, I'll answer it kind of in a couple different ways. The network hash rate today is 600 for Bitcoin mining. I think we're going to end the year at 800 or 900, meaning the network is going to grow by a factor of 40-50%, in my own opinion,
at these levels.
Yeah, at these levels, and so the network that supports Bitcoin mining, in my mind, will continue to grow. And if you think about what the overall demand is, right, people saw globally that there's about 15 to 18 gigawatts of infrastructure that supports Bitcoin mining. There's probably 5 to 7 gigawatts in the United States. The data center demand today is somewhere around 30, 35 gigawatts, and that's projected to 4, 5, 10x, depending upon whose forecast you want to use. And so when you think about the relative scale of the amount of demand that's coming from AI, it is, many multiples of the total Bitcoin network that exists today, and that's just in the US. So I don't see it as a either or, that Bitcoin miners are going to say, I can either mine Bitcoin or I can do AI. I think it's those that understand infrastructure and can locate large loads are going to look at both of these things. On a pure cash basis, Bitcoin mining is very profitable. And again, you have periods where you earn a ton and periods where you earn a little, but even averaged out, Bitcoin mining on a pure cash basis is a very lucrative business. The difference for public companies is if you have a customer like Microsoft that you're providing high performance compute to, the multiple that the market will assign to it is probably very different than what they'd assign to a Bitcoin miner. And so I think it's less about, can you make more money? So I think you could probably make more cash mining Bitcoin, but it's how does the market think about it? And I think today there's a big difference in how they think about Microsoft versus Bitcoin mining. But I think over time, particularly as Bitcoin continues to gain adoption and more acceptance, I think the multiples that Bitcoin miners have for just mining Bitcoin should, work their way up. Will they ever get to what it is if you have a 15-year offtake with Microsoft? Maybe not, but it shouldn't be, 6 times here and 25 times with Microsoft, right? And think, Bitcoin miners will start to get a higher multiple for their Bitcoin mining revenue. So it's both kind of how much money can we make, as well as from a market perspective, how's the market going to value those cash flows that are being generated?
So what's the goal of, going into 2024? You've already mentioned where you think where you think you're going to grow to. Where do you, what's your prediction about what we see to continue happening in the cryptocurrency market? Do you think that we continue to see an increase in the value of Bitcoin over the next, the rest of 2024? Or do you think we've seen the institutional money come in now into the game? I don't know. All of this stuff happening at the same time.
I think I'm a big believer in Bitcoin. So in general, I think the price will increase. And whether that's over the next month, 3 months, 6 months, a year,
who knows?
But I think in general, right, Bitcoin as an asset's here to stay, and it has kind of increasing demand that's been shown. And so whether we, pulled forward a lot of demand with the announcement of the ETFs, and that's kind of, pulled forward a lot of demand for the next 3 months, 5 months, maybe. I don't know. But in general, I think, adoption is increasing on Bitcoin, and we'll continue to see an upward price. Does that mean it's always going to go up? Obviously not. But in general, and a lot of things, whenever I talk to people about Bitcoin and try to get them to understand it, I'd say to them, listen, you buy Bitcoin today. I don't really care what the price is. You buy Bitcoin today. You send me a screenshot of the Bitcoin you purchased. 2 years from that day, if you want me to buy that Bitcoin from you at that price, I'll do it, no questions asked.
All right.
And because over that 2-year period of time, I'm pretty confident that it's going to be a lot higher than what they bought it at.
Right.
Within that 2-year period, I don't know. So again, for us, we believe in Bitcoin.
Well, the CME would probably take that trade for you.
So I don't know if I have enough money to back that one up, but I think so we believe in Bitcoin. I think in general, you're going to see it. And again, with mining, the challenge is not just the price of Bitcoin, it's also the network hash rate.
Right.
And so in 2022 and early 23, we saw a period where the network hash rate was increasing and the price of Bitcoin was decreasing. So we were being squeezed on both ends with respect to your profitability. Now we've seen a period where, the price of Bitcoin has significantly outpaced the increase in network hash rate. So margins have kind of expanded again. So again, we remain constructive on, the mining business and where we're going to be. So we're definitely, focused on that and continue to scale up. And then in addition to that, we are very seriously, reviewing uses of our infrastructure to kind of support the AI space as well. And again, as I said, the availability of large scale, low cost, zero carbon power is not that much, and demand is very strong.
Do you ever see yourself growing into more locations? Or
Absolutely. I mean, we're going to be at 550 megawatts by the end of 25. We're working on some things right now that will be 2026 and beyond type items. But yeah, I mean, our goal is just to have, a couple gigawatts of capacity under operation, as we look out, 4 or 5 years from today.
TeraWulf, symbol WULF. Check it out. And Nazar, thank you very much.
Chris,
I really appreciate it. Thank you very much.